Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Here we go. We got the dollar moving down a little bit against the Swiss. You can see it there on, let's see, let's move it over. There's on J4X. Well, you don't see it on J4X yet, but you will see it soon. And you can see it here on the Chicago Quant, but both, notice on J4X here with the curve, same situation over here on Chicago Quant, both moving in that direction. We can see the Swiss has been in a weekly buy since the 91-ish area, and we're cruising around in the 93-ish area. What else can we say about that? I guess that's about the story, really, in the end result. Oh, in a daily sell for the last couple of days, but that pop yesterday put us into a buy, and now we're normally that should be down here. Let's put that there we are. And normally, what happens is that it goes up, but not this time. And we are at the top end of the range, so we're actually seeing one of our signals not doing too good a job here for a change. So that's the way it rolls. It happens every so often. Can't be 100%. We are 80, something like 87%, something like that, close to 90. But anyway, I always say 1.5 out of 10 times we are wrong. And that's usually about the number there. So you can see here the dollar is showing that wild and woolly strength overall. But today, at this moment, no. And we've seen bond auctions kind of freak things out. We've seen the metals market kind of twisted. We keep on talking about that, whereas the metals market has a natural tendency to do the opposite of what the technicals try to tell it to do. Not our work. Our work is following it. Robin and I had a good conversation this morning about silver. And, the currencies and the metals complex are all, part of each other in the end result. So, when you're looking at the currency market, you have to realize that you are also looking at the metals market at the same time. Oh, let's go check the fact check, not the fact check, the Dukascopy, and see if anybody is asking any questions at the same time there. Yeah, there you go. All right. I don't see any questions, so we have not missed anybody asking anything, so that's a good thing. Let's hit that skip there. Where's that skip at? There it is. Dismiss. There we go. And so looks good here. I can see it on the Dukascopy. YouTube shows that teeny little heading back down again. Notice how it's been vacillating on this channel that we've been watching for over 12 months now. The inflation has to be a factor that we're not really understanding totally when it comes to looking at the charts and different products. But it has to change some of it, since currencies are basically held in a large channel, and the metals complex seems to be beaten down constantly by the central banks and so forth. So inflation has to be doing something. Now, we don't see the same characteristics that we see in the currency market that we've been seeing in the metals market with this inflation. The inflation seems to be almost running away or let's put it this way, the metals seem to be running away from the inflation conversation, which is very strange. Robin was saying to me this morning, they've moved the physical silver up to 32.5 to 33 now. So we're looking at this good $10-11 premium over the exchange traded silver, which is kind of odd in its own right. We're gonna go take a look at the metals complex in a little bit. We've seen some anomalies. We're gonna have to point them out. But we're just going to keep on marching through our currencies, because this is a currency webinar to start off with, and then it becomes a commodities one. All right, second of all, we go to the euro, and you can see the euro is doing the same thing as the Swiss. It's trying to lift up, but we're down and below. We've been in a sell from there, and we've been in a weekly sell from up in here. So the issue is still the same, and that is that it has more of a desire to go down than it does to go up. And that has been the true action of the product itself. See right there. There is, let's move that a little bit more so you can see the currencies. There we are. There we go. If we make that just go up a little bit higher, we can see all the currencies. Like so. That we follow. Whoop. Yeah, there we go. So it starts off with the Aussie, and we go all the way down to the dollar index, but mainly the NAS, the New Zealand against the dollar itself. All right, and so the euro, you know, it's playing the bottom end of the range, just like, let's just show you real quick. The euro, the Swiss is playing the top of its range. Remember, they work in this pairs trades of the euro is euro against the dollar. So you're looking at the euro. And when you look at the Swiss against the dollar, it comes up the other way. As you can see right there, you see dollar is ahead of it. You see dollar Swiss, and then euro dollar, or euro Swiss, that type of thing. And so they're both playing with the ends of the range that they've been playing with for 12 months, 14 months, something like that. And we've been watching those ranges, and they seem to dance along them. Now, when it comes to the cable has been a little bit more on its own. Let's show you there. There's the cable. The cable, it's dropped. We thought we saw a range, and we followed it for a while, that it was the 40s down into the mid-30s. But let's see if we can set that so you can see it better. There we are. And every time it got up into the 40s here, it kind of found a way to fall back down, the 42 area. And that went on, it's been going on pretty much for over a year. But at the same time, our bottom end of the range was not really as clarified. It was like the 134s or 136s, but overall, it didn't really hold up until now. Recently, we can see it's developed a much wider range over the last year, and it seems to be the 134 to 142. Now, we've seen it lift through the 42s, and just as it's broken the 36s, we really thought the bottom of the range was the 36s for a long while, for almost the whole year. But it has now just adjusted itself. Again, we have to speculate that it must be the inflation. Remember, the central banks hold all these currency pairs in some type of established range, and they talk about it. And the U.S. Treasurer, like Mrs. Yellen, Mnuchin used to do it. He used to make a quarterly statement about who is manipulating and who is not manipulating. So obviously that was the telltale that they do follow a range, because you wouldn't be able to know if something was being manipulated or not, if it, unless you had a price range to be able to measure it by. They wouldn't be saying, okay, you bought too many euros today, but euro didn't move. That's not manipulation. Manipulation is when the price changes, not necessarily volume or something of that nature. So we know for a fact they definitely use some type of range to measure what they think it should be. That's pretty much what the answer of it all is. All right, there is the cable, and that has been the range, and now we seem to be coming off the lows, which is a little bit more interesting. Now, to see it get through that 36 would be matching up to the Swiss playing its range and the euro playing its range. And we have not really looked at the range in many other products, but these three majors we have looked at a lot over the last 9-10 months. We've talked about it, and it's been playing itself out very interestingly. Now that we have this inflation, and another Fed chair did come out last night saying, we don't really understand transitory inflation at the moment. They don't understand it. Okay. All right. You got to wonder, who are allowing these people to be part of the Federal Reserve that they don't have the ability to recognize the simplest of math. In other words, if you buy 3 apples for $1 and now you only can buy 2 apples for $1, that's called inflation. All right. From there, we drift over to the Turkish Lira. It made a little jolt there yesterday pretty well, and it's doing it again today. You can see it right there. Another new all-time high against the dollar Turkish Lira. It's holding up pretty well. It's playing with the range that we established in that 7-8 months back. So where was it? Right there. We established that range back in March. And we were looking for it to play the top end of that range, and it has played it a few times where it gets very close and backs off. And now we're going through a period where it seems to want to climb above it like everything else. And that's the Turkish Lira, the dollar Turkish Lira pairs trade. And so overall, one of our more enjoyables is taking a look at the euro against the Turkish Lira. That has more insight as far as we're concerned. So we're going to just drift over to that and check it out. Let's see, right there. Get it up on J4X. Right there. So this thing is marching up. It hasn't taken out this high from the spring, late winter, but it is. Let's see if we can contract it a little bit more. When we established the range, yeah, okay. So now it's playing the range pretty comfortably, and it has not done too good a job of going down to the bottom end of the range, and so it's riding it. And they challenged it back in June. Played with it in July, and played with it again back in August. No, I'm sorry, September. And now we find ourselves flying through October above it. And so that's really where we are at the moment. Let's see, what else can we say about the euro? I guess that's about it. Just the fact that it is in the weekly buy, it's going up in value. It's normally the way it works around here. Usually the math is that accurate. And when we look at it on J4X, same situation, and the strength is right there on the daily there. So, and the green hinkies showing that strength just like we see it right here with the green dots. And that has pretty much been the excitement of this particular product. We always like to call it the dessert because we find the euro fascinating in the sense of there's not many currencies out there with a major economy, and I think of Turkey as a major economy. I know it's not China, but it is a major economy, and and you look at that and you just go, wow, currency went from 1.5 to now trading at 9-ish and change in the dollar, and I think it went the same way. I guess it was 1.5 or something in the, let's see, when we go back to, and I always like to call it the beginning of the Aragon era, when he became prime minister. Let's make this a monthly, and we'll show you that the same situation has occurred in the, as it loads up. Load there for a second, there you are. Yeah, so the 1.5, 2 area. So it's gone from 2 to 10 when it comes to the euro. Right there. It's under 2. It's like 1.5, 1 3/4. So I mean that's pretty exciting stuff, Way, way, way exciting stuff. Let's see, guys. There you go. Just need to answer that real quick. All right. So, how many? We don't have many currencies that we can actually point out that have had that dramatic a move. We never even hear the Fed chair, or not the Fed chair, the Secretary of Treasury discuss Turkish Lira and its manipulation. They never say anything about that. So I find that even more curious. And they hide most of the stuff that they talk about. But every so often, we get a window view of what they're doing. We can see right inside the house. And one of them is that they measure how all products, all different currency pairs, trade against the dollar. And they define who is doing manipulation and who is not doing manipulation. That alone is weird in its own right. Alrighty, from there, trying to get moved over. There we are. And then from there, what do we have here? We go to the Canadian. So let's take a look at the Canadian right there. And yesterday we were insinuating or speculating that maybe the election's working out in more favor than we realize for the country. And that could be literally the part of the process that's going on, is that we find ourselves, watching the Canadian move down against the dollar, which is pretty impressive. A lot of times this happens because of stronger oil, and sometimes it happens because it's stronger gold or metals complex. But this time around, we've seen this thing go from the top end of its range, right there. See, there's the range on the Canadian. It's played that since November of last year. And that's been the big, slow swinging range of 120 to basically 129. You see it played it again back in, what is that? That is in August. Played it again in September. Missed it in, July. Played it back in February and in January. So, and then you can see it played the bottom end of the range right there, which was fascinating to watch it even do that the way it did. And now we're stuck in the middle of the range, and we have elections up there, so there must be something going on besides the metals complex. Because you would think that because of, oil, let's just take a quick look at oil. Let's just check it out too on Chicago, or J4X here. But oil itself has not exactly made that dynamic a move. It's trapped between the 68s. Where's it at? We'll show you in a second. Yeah, there you go. So it's trying to find a bottom in there, and you can see that. And this thing has. Let's go show you the weekly. I'm just going to look at the Canadian a little bit longer here. You see here from the bottom, went into the weekly buy right at the bottom, and now we vacillated in here. Went into a sell, went into a buy, and now we're back into a sell again. You would think that it would be already challenging the bottom end of the range, because look at oil here. We're going to go over to J4X for the oil. Right there. Oil has, had a nice run, from the mid 60s to 80. That's $15 over the last 3 months. I would have thought that the Canadian would have moved down even more. Maybe, like I said, there might be just a lot of uncertainty because of the election situation there. And then when we see it right here, right there, there's oil. I don't see it as, death-defying. But it has had an interesting run from the 40s back in December. So back in December, in this product, December, we had the product trading at the top end of its range. Can you see that now? Let's do this. You can see it here, trading at the top end of its range at the same time. And it found a way to get all the way down to here when oil went from, Oil went from 40 a barrel to 60 a barrel. And that's that's where it landed here at 60. But then it turned back up, and oil also at the same time did the reverse of that. You know, it kept on climbing in value. You know, a little hesitation here and there, but overall just climbing. So the relationship is not as strong as, you know, at one time as we saw it, but it still shows characteristics of it. You know, it really does. Now, we always look at the same time, we look at gold. And gold has gone like the reverse of it. You know, gold has fallen from the 19s, and when we go back to December, it was in the 19s, and it fell down to the 17s, climbed back up to the 19s again, and now it's fallen back down to the 17s. I think it even pierced the 16 at one point. Yeah, right here. No, that's 17 still. So it keeps on holding up in the 17 and from 1900 and change to 17. Hello, Farkas. I haven't seen you in a while. How you doing? Good morning to you. Good afternoon and good evening. So you can see it's been hanging around in there. Now we're going to have an interesting conversation today about silver, because Robin and I were taking it apart and saw a lot more characteristics that were well worth mentioning to a lot of people. And you know, and that's exactly what's going on there, is that we're finally, you know, getting more and more of an understanding how they trade physical versus paper or exchange traded. We'd like to call exchange traded gold and silver paper traded, because it doesn't seem to reflect the physical. All right, let's see. Let's show you gold right there. And as you can see, it's trying to turn down on Chicago Quant. I'm sure we're seeing the same type of action over on J4X as it loads up. There we go. And it is. It's moving down. And the same thing from the peak. And you can see we've been in a weekly sell for 3 weeks. Whereas we're going to give you a little show of silver too. No, sorry, stay right there. Go like there. Silver just refuses to get off its back. It's been in a weekly sell for over 22 weeks now. It's a fact check say. The 22 or 23, I think it might be 23 now. No, it's 22 still, okay. So this is the 23rd week. It was at 5 more weeks, and we'll be half a year. I don't know if that's going to last, but we're going to try to take a closer look on the silver to see if we can give you a better opinion. Let's go that way through our math. All right, where do we start off from here? All right, so now what we do is we jump over to the other 4 currencies that we watch. And that is, we look at the South African Rand right there. You can see it's moving down a little bit. Gold has been kind of firm, and so has been silver, so that's normal. You can see even here the daily's trying to pick up. And we'll take a look at it right here. Where are you, Czar? There you are. And you see there, it's doing basically the same thing. It's trying to move down, but we're still a green dot. We do have 2 red dots back to back with 2 green dots, 2 volatility signals. And we're still in the daily buy right there. By the hair of its chinny chin chin, but it is still in there. As you can see, right there. And we're in a weekly buy, since right in here. So it's just going sideways, really not taking off. It's not exploding in any particular way, you know, that type of thing. Charts and indicators. Let's see, now I'm back to the basics. I've been in a quant phase for a while now. I like that. I've been in a quant phase, good, and now I'm back to the basics. You mean like fundamentals, charts, or just charts and indicators? Yeah, I mean, fundamentals is a real quagmire at the moment. It has been that way since 2008. I was saying to Robin, a friend of mine sent 2 different papers, 2 different articles in the last 24 hours about I guess it's the head of the department at Dartmouth, Flower or something like that, and he was on Bloomberg and talks about us being and going into a recession, but he doesn't refer to the quantitative easing that's been going on since 2008. Then he sends me another one over here today, this morning, and again, let me see if I can find who did that paper that he sent over. Let's see, inbox. I probably erased it already. Yeah, I did. Go into my trash. And he sends over another paper, and again, there is no conversation about quantitative easing. And it's like, what is the malfunction there? I mean, why don't, how can anybody speculate, in their right mind, right, about inflation and so forth, and stagflation? This is out of University of Iowa digital report, and I went through all the pages, and I went through them all. I did a long scan. The closest they got into comparing anything was in the 70s. So they start off in the 1930s to 1970s, and I think there was a 1980ish. How do you not write a paper if you're a professional, a professor or an economist on an academic level without including quantitative easing? I don't understand it. How can they miss it? It has me totally mystified that, and you can see it there, 1930 something he's quoting concepts. And he was talking about 1974. And it's like, how do you look at fundamentals and basics? And he's got some charts and so forth and, backed up data. But how do you do that without mentioning quantitative easing? And you can see here, he's looking at 1974 and he's looking at 1930s, but he's not. I would think, if I was an academic in economics, I'd be writing all kinds of wonderful stories and analyzing how things have been and how the PE ratios are and how open interest is and how short interest is, and I'd be going through all that stuff. And here you have almost 40 pages, and there's no quantitative easing. How does anybody do that? I don't understand it. I mean, are they on the payroll? Do they? Is the Federal Reserve giving them money? What? Maybe a promise of being the next board member? I have no idea, but I don't know how people from prestigious universities can write things without talking about quantitative easing. I mean, none. So it surprises me all the time. All right, anyway, there is the South African Rand. You can see, gold is moving. I think gold's moving up, is it? Let's just take a look at it on JForex. Yeah. We'll do it here instead. This way we can see both together. Let's do that. And let's do, actually I gotta go like that. There we are, and like that. And that's silver there. You can see silver's moving up. And since silver's been moving up in firm, and gold pretty much the same way, they're both in daily buys for over a week now. I think this one here is, and you can look at the little weakness starting to kick into that too. But, from the red dots. But it's been in a daily buy since the 30th of June. Not June, September. And here we are on the 13th, so it's been a couple weeks now we've been in a daily buy. It's starting to run out of steam there. We've been in a weekly sell through most of that. So it's been a real battle. It's a neutral. In other words, our math is saying be neutral right now. Don't be long, don't be short, just be neutral. Same thing with silver. Silver's been the same exact way. And that's usually a good sign of direction with the South African Rand. If these metals are making money, usually the South African Rand, as you can see right here, would normally be going up. I'm sorry, going down, and it is. It's going down. It needs to go down when metals are making money. but it's kind of trapped in more of a chop. You see it's trying to go back into a buy here on J4X, and when we look at it through Chicago Quant, it's doing probably the same exact thing. Yeah, and there it is. It's in buy for 2 full days and trying to hold up and going nowhere at the same time, because we're in a weekly buy, telling us the longer term pressure is on the upside, which means what, traders? Good chance that we're going to see silver and gold move down again, which makes, it's kind of mystifying to me. Inflation. Doesn't anybody hear the word inflation? Don't they go and try to purchase things, so forth and so on? So Farkas says it into charts and indicators. So that's the basics. I like that. Blocking X and O football, American football. X's and O's. Follow the lanes. Indeed, indeed. So that's where we are now. And let's take a look at the other 3 currency pairs, and then we'll go back over to the metals complex. Let's take a look at the ruble. There's the ruble. Ruble went into a buy. No, it didn't make the buy yesterday. I thought it did, but we have a red and a green. So in essence, we are still in the sell for 1, 2, 3, 4, 5, 6, 7, 8 going on. So it's 8 days. And then at the same time, what do we got going on there? And yeah, see, it's wrong on here. Let's fix that to, let's move that to there. Last night I didn't see the red dot. 8 days. There we are. And save. So ruble, been in a weekly sell since up in here. You see that there, and tried to pop, but we got that red and green. I thought it was just a red yesterday, but it was a green too. So that stopped it. Actually, I thought it was a green, not a red, but it turned out to be a red and a green. So it keeps us in the sell. Now today, if it stays here, we can go. It will, and it closes just with the green. And above the 0 line, it will be officially in a buy. I don't know how long that'll last, since we've been in a weekly sell for a while, but we'll follow and see. And then let's check it right here. You can see it. There's the ruble. Same situation where it's reflecting strength, and even a green hinky, you would think, from yesterday or starting today. No, not yet. It's still showing weakness. And the white line is still having a hard time passing through the dashed line. All right. Next one we take a look at is, wrong spot. We take a look at the Japanese yen against the dollar, and that's been in a daily buy for a bunch of days. And you can see it's still up a little bit here. Lots of green. You see the white line through the slow-moving stochastic there. The fast is doing fine. And over in here, you can see the same situation on Chicago Quant. As you can see, it's curving over a little bit, just the same way that J4X is doing a little curve in here, and we have the little curve going on right there too at the same time. But we've been in a weekly buy for a bunch of weeks, right there. So that's 3, 4. This will be the 5th week in a weekly buy. So we'll see if we can at least break or touch the time manifold, and see how it treats it from there. All right, last currency we look at is the Mexican peso. Unched, which is unique because it's trading at a pretty high range at the moment. Oh, look at that red hinky. Interesting. Let's see what it looks like right here. There we are. That is, the strength that we're seeing in the Mexican peso against the dollar there. It's not letting go. I'm not sure exactly what has it concerned, but they're obviously losing value against the dollar here. And it's not ebb and flowing like it normally does. It's they're battling with it there. Who knows what Mr. Biden might be doing to the poor country? Anything's possible. Anyhow, that is what it is. That is the four currencies. If you have any other currency you'd like to see, just give a shout out. We will put it up there. But right now, we are going to drift over to the metals complex. Silverado. Silverado. Singing trader. Right there. And there's silver. One of the things that really caught our eye this morning was we were looking at silver and how it has been. Let's see if we can show you through J4X first. The stair step moving down from the highs here. There, and then it fell again, and then it fell again, and it fell again. Now, when looking at it closer, you can see a reverse head and shoulders here. But every time it sets up for a reverse head and shoulders, like right there, it fails. And it becomes a stair step down. There's another one right there, reverse head and shoulders, and fails. And then a reverse head and shoulders, and fails. So it's been doing this now since it's topped out into the 28, 29 area, which is, to me, very curious. Every time this thing tries to show life in it, it fails, which is very odd. You can see here, there's that first head and shoulders and dies. Second head and shoulders and dies. Third and dies. Fourth, very powerful looking head and shoulders and dies. Tries to close the gap too. And now we are down in here trying to do the head and shoulders again. And you got to wonder, I mean, we're in weekly sells. We've been in weekly sells for almost half a year now, 22 weeks. 26 weeks makes it half a year. And we're working on the 23rd week right now, so that's just 3 weeks away, really, to get to 26. And so, it keeps on failing. And you would think in the times of inflation that one of these head and shoulders could survive, but it's done it 5 times since we went into a weekly sell, and it just refuses to stop. And so, we're thinking about writing an article about that today. It's fascinating, the fact that we see the technical fundamental of a head and shoulders, reverse head and shoulders, and we're in a weekly sell. So Doc's math has been keeping you out of the long side of every turn up for a good reason, because every time it turns up, it's been not very good. I mean, yeah, there have been cute little bounces, but unless you're trading binaries or derivatives, options, forget about it. So the winner chicken dinners keep on being the sells. That's the best trade of all, is the sells. And every so often we get a nice little sell that really breaks down. And this one here just missed it with. I think we mentioned this. This was a sell on the other contract. Remember, this has been switched a few times. So the July contract, I think it was a sell, and it caught that move. And here we are again. Now we're in which contract are we looking at? We're looking at the December contract. We've got a couple months in it. And you can see it's trying to give us the buy signal. And we're in a daily buy throughout this whole thing here, but we're in weekly sells, so you can't take the long. And in many ways, if you've got the long right there, yeah, it's great. It went from 22 to 23, no doubt. $1 is a good move in that product. But it's just not something safe to do, because every time it does, it fails. So I mean, the next daily sell could be a pretty exciting ride. It could be another failure after, was it six reverse head and shoulders? Let's give that count one more time, just for the interest of it all. So it was 1 head and shoulder right there, 2, 3, a beautiful one trying to close the gap, 4, and now we're on the 5th head and shoulder over the last half a year, and each one of them has been a very poor indicator. It's not the norm. in normal years without quantitative easing, these head and shoulders take the thing back up to somewhere, back to the 26s and the 27s, especially with the Federal Reserve saying, yes, inflation is becoming a problem. How does the metals market collapse like this at the same time? It defies thousands of years of logic. Thousands now. It's not decades or hundreds. Thousands. Silver has been the go-to when people were concerned. And here we have it where it just keeps on failing. Now, when we look at the same pattern in gold, right there, let's put it up on J4X too, so we can compare the analogous, the two of them working together, the J4X and the Chicago Quant, right there. And so gold, pretty much been the same way since it went into the top up in here. And that top was met a few times, which is fascinating. 1900, met it a few times, made all-time highs there or something like that back in last year. Yeah, there it is. Back in August of last year. And 1900 has been the ceiling now. And 1700 or so has been the base for the last year and a half. So, it's just not, here we are in the middle of inflation. You would think we would be at least trading at 1900 again. But no, we're hovering in the mid-17s. So this is not the tool to hedge yourself in upcoming inflation. If anything, I guess you could say is the cryptos are the place to be. There's, let's see, where's that? There's a crypto right there. You can see it's holding up. Went into the buy here, the weekly buy here, and went into the daily buy in here. And it's been one big winner chicken dinner. Now platinum, which showed life, I mean, someone must have said, whoa, inflation, gotta buy. And they bought, platinum for the first time. I think it was like 23 weeks in a weekly sell. And went into a buy. The thing had run up $100 in 3 days. And didn't really disturb anything else. And you can see here, it's everything we've been watching with the platinum, it's holding up in its range there. And it's doing its thing just at the top end of it. So, all right. From there we go over and check out the energy complex. And there's the crude oil playing with the second day of a daily sell. But we are in a weekly buy there. Oop, didn't mean to grab you. There you are. We're in a weekly buy there for going on 6 weeks now. I'll show it to you over here on J4X right there. There's the crude oil down. You can see that. And we might get a red hinky soon. We do have 2 red dots here. And I love it when we get that day where no dots occur. That's fascinating. Sometimes that emphasizes the corner of an action to come. Or it's kind of like that, like the edge of things. We took a sip of our tea. So, that is crude oil. I don't think it's really getting beat up in any way, solely because look at the weekly. It's very firm. Just some profit taking. And then we take a look at nat gas right there. It fell down from the awakening of $33 nat gas in Europe. And now it climbed into the daily buy yesterday. Oh, we don't have the line in there. Let's put that line in there. And today it's giving it back a little bit. But we've been in a weekly buy in this product since the $4 area, and it's gone to the $6.50 area. So it's been one magnificent move, a 50% move. Fantastic. Beyond 50%. Then we drift over to heating oil right there, which is going to be very important for the cold weather. Notice it's following the crude oil move. And in many ways, we can take a quick look at one of the other oils that we rarely talk about, but is truly part of the universe here. And that is the bean oil, which we put an article out yesterday on. Let's just show you natural gas there while it's filling in. There's the natural gas. Now the bean oil, let's see, right there, topped out just 2 days ago with the crude oil, which is fascinating. This thing is adhering to it. Been in a weekly buy for 3 weeks, and it ran from the 54-ish to the 62-ish, which is a heck of a move in this product. So you can see bean oil is an oil that can burn, so they kind of pay attention to it with the gasoline, heating oil, natural gas. So that's the view of the energy sector, I guess you could say. That's the true view of the energy sector. So that is what it is. And I guess the thing that has my eye more than anything else is, again, we're fascinated by the way silver has been moving. And we're really going to be emphasizing to pay attention to that, traders, because another great short might be coming around the corner, which is incredibly hard to believe when you have the Federal Reserve talking about inflation. But hey, we see no academic papers talking about quantitative easing. You would think that they would be coming out of the woodwork with that. At least in my head, it would be. I would be like, if I was an academic in the economic arena, I would be pushing about that over and over again. But instead, I don't see any of the stories come out. So they must have everybody, appeased somewhere along the line. And then, after this is all over with and everything is finally fallen apart or changed in some way, then maybe the academics will be allowed to come out, and maybe they actually threaten them. If they write an article, they won't get any grant money. Maybe that's what they're doing. Because it doesn't make any sense to me. It's, how can you not be talking about quantitative easing? You're talking about $120 billion every month now since 2008. Every month it's plowed into the market. They don't float bonds to create the $120 billion. They create it as a line item, like as if it's real money at the Federal Reserve. And ECB's been doing the same thing, $60 billion a month. How can they not bring this up? I don't know. If anybody out there has any ideas how, fire it out, because I'm curious as all get out. What other ideas, other people have about that fact that they don't talk about it. All right, let's see, where was we going to go? Okay, I guess it's time to go to the stock market. And we'll take a look at, I was saying to Robin, the head and shoulders in the stock market is the opposite. Every time you get a bottom, a reverse head and shoulders in the stock market, it breaks out on the upside. And every time you get a reverse head and shoulders in the metals market, it falls down. Go figure. Does it sound like someone is controlling it? Mm-hmm. All right, let's jump over to the currencies. Let's see, where's it at? Right there. And we'll look at the S&P 500. Right there, it seems to be doing that same thing as yesterday, finding a way to climb up. Right there. This is the intraday view. We're going to throw the daily up on J4X, and then we'll come back and look at the daily on the Chicago Quant at the same time. Oops, wrong one. That's Dow Jones. Right there we go. All right, so you can see here, what was this? This is when the news came out today about the consumers. Matter of fact, maybe we should take a quick look about where did the consumers come in and what was the numbers looking like. Let's see what they came up with. Let's take a look at Dukascopy's economic calendar. Let's see what's going on there. So you can see right there, what's that, today? Let's go to today, right there. So this morning, our CPI came out. It was a high stat. And CPI came out at 5.4. Actual, they were looking for 5.3. So consumer prices are moving up year over year. On the month-to-month basis, there's nothing there. That was a high number too, but they're not reflecting it. And consumer prices year over year, 4% versus 3.9. And everything seems to be showing gains. And the indices moving up a little bit. All right. And so you can see here, since that news came out at 7:30, to see what it was, 7:30, right there. So the news came out right here. There it is, right there. Came out right on that bar. They took it up, knocked it down from the 55 area all the way down to the 35 area, so they didn't like the idea. And then that magical hand came in and started buying. And now we are in the 50s again. And there's your reverse head and shoulders too. And sure enough, it goes up. Okay. Now obviously it failed on this one right there, but the next one, about 10 minutes later, is the basis of it. And here's another one right there that was a success also, right there. So that's how that reverse head and shoulders. Douglas, thank you, Doc. What did I do right or wrong this time? What did I do wrong now? And so let's see, what do we got going on here? So that's that. Okay, so that's the S&P 500. You can see it over here on daily, showing pressure. They still don't seem to want to lift it up so aggressively as much as they're acting like it. And at the same time, the product is plus 8.5 points. Now let's take a look at it on Chicago Quant. Let's see, which one is it? So I guess we'll go to here now. And there's the S&P 500 right there, just like in Chicago Quant. And you can see we're in a weekly sell off and on for a couple of weeks from here. And then now we're in a weekly sell again, and it's doing the up and down. The buy defended it for us. That's nice. It's the short gave it to us again, and now it's just a little bit right at where it went short. And you can see the last 2 weeks still in a sell, going on a third week, still hanging down there. So that's the S&P 500. Now let's take a look at the Tech 100 right there, short-term basis. This is more interest rate driven, and we'll put it up on the J4X at the same time, right there, the USA Tech Index 100. Okay, Douglas, I'll bite. What are you thanking me for? Thanking me for being crazy? Thanking me for rambling about QE? Thanking you about silver? Silver's a goodie. Watch out for that silver. We get a daily sell. I don't know. It'll be the 5th head and shoulders failure. Now here is the intraday. You can see here from that number at 7:30 right there. Ran up just like the S&Ps did, and then they sold them down. And now they're right back again, right where they started from. And there was no real head and shoulder pattern here. I don't really see it. And then this was a head and shoulders, reverse head and shoulders. And it was zoomed to the moon Alice. It was also the William O'Neill cup and handle. Right there, there's the handle to the cup. Take care, Farkas. S&P. Okay. Okay, cool. Yep, have a good day, Farkas. Glad you came back to say hi. Hi. How are you? And then let's check out the S&P and the NASDAQ 100 on a daily. So you see it here. It's also battling to go back down again. And you can see it over here on Chicago. We've been in a weekly sell for going on a third week. And we have went into the sell here, we went down, we went back up to it again, And now I don't know, we're flirting right in the middle there. So we're in a daily sell for a couple days, so maybe it'll roll over here. That is the action we're seeing in the Tech 100. Now, the NASDAQ 100, also just a caveat, and that is that it's very interest rate sensitive, much more than the S&P and the Dow. So, yesterday the bond auction in the morning did poorly, and then the second bond auction in the day, the 3-year did bad, and then the 10-year did great afterwards. So someone rushed in and saved the day. Hooray for them. And so now that's where we're at, is that we are watching the interest rate market jump and jive. Now, last one we look at is the Dow Jones Industrial Average right there on an intraday basis. It's trying to climb back up to where it started from in the 7:30 period right there. That was it. First inclination was a spike up, and then they took it down. And then now they're bringing it back up again, and no real head and shoulders. Well, actually, here's a head and I'd say that's almost a reverse head and shoulders there. It's kind of sloppy, but matter of fact, here's a head and shoulders right there. There's a head and shoulders, and it did break down, but it's kind of sloppy. And then, and you can see here, the intraday, pressing down now. And let's put it up on J4X. Right there, there's the Dow. And it's only up 23 points. They're putting some pressure on it. The action is pretty much the same, which is kind of interesting because the Tech 100 on J4X is showing it to be up near the highs of the day. Same as what we have going on in the Chicago Quant chart. So, and you can see here the weakness is breaking down on an intraday basis. Pressure is on. And then you can see here the daily is having that same issue there. And oh, you can't see the intraday right there. There's the intraday. And you can see it's trying to break down here now. And we're coming up to the U.S. Open in about 3 minutes. And so you can see here, right there, there's the daily. And so that's what's going on. And it jumped into a weekly buy after 5 weeks in a sell. And now it's trying to go back into the daily the weekly sell again. So we're seeing that pressure in the product itself. All right, we're done. This is Doc from North America saying everybody have a safe and smart trading day. We will catch you all tomorrow on Happy the Hump Day. Happy trails to you until we meet again. Happy trails to you, to all our global friends. Ta-ta for now, traders. All our global friends. There you go, just want to make sure. Yes, indeed. Arrivederci.